Hello and welcome to the week ahead video with me, David Madden. Now before we take a look at the major events of next week, let's just take a quick recap of the major events in the week just gone. This week we heard from the Federal Reserve, the US Central Bank, who stated that soon it will be appropriate to start hiking interest rates, and Jerome Powell, the head of the Federal Reserve, didn't rule out the possibility of hiking interest rates at all 7 meetings that are penciled in for 2022. So overall there was quite a hawkish, it was deemed to be quite a hawkish update. The Fed funds futures market is pricing in 5 interest rate hikes from the Federal Reserve this year. Keep in mind, in December, at the December meeting from the Federal Reserve, the US Central Bank projected there will be 3 interest rate hikes in 2022. So you can see how sentiment has become that much more hawkish because of the most recent Fed meeting. The reaction has been a sharp upward move in the US dollar and in turn a sharp downward move in euro dollar, which I'm looking at here. Euro dollar fell to its lowest level since June 2022, which really kind of underlines how bearish the recent move has been. While it continues to hold below these 3 simple moving averages, it's likely the recent negative trend will continue. Moving lower from here, we could hit the target at 1.1000. If you take a look at the RSI, we can see it's been moving lower and it's now moved into oversold territory. This could be an early warning that the recent downward move in price has become overstretched. If we do see a snapback in euro dollar from here, resistance might be encountered from this simple moving average here, which comes into play at 1.1217, and a break beyond that could target this zone here at 1.1305. Now, the major theme of the last few days has been stock markets around the world, particularly in the US, have been under pressure because of the hawkish update from the Federal Reserve, and the US dollar has been quite strong once again because of the relatively hawkish Federal Reserve update during the week. Now, what do we have next week? On Thursday, we have the interest rate decision from the European Central Bank and from the Bank of England. In relation to the European Central Bank, no change to interest rates are expected, but of course the commentary and the language that the European Central Bank use is going to be very much in focus. The European Central Bank are kind of much well behind the curve when it comes to potentially hiking interest rates, because keep in mind the Bank of England did surprisingly hiked interest rates in last month in December. Now, there's been increased chatter that the Bank of England might look to begin to carry out more interest rate hikes in 2022. Once again, the language and the commentary that the Bank of England use at this meeting will be very much in focus. Similar situation to where the Federal Reserve is, whereby they'll be just trying to decipher how hawkish or not be it the case the Bank of England are going to be, and then that could pave the way for the next leg in GBPUSD. Because of the broader rally seen in the US dollar, we've seen a sharp move to the downside in the last week or 10 days in GBPUSD. Recently, the currency pair fell to its lowest level since late December, which really kind of underlines how bearish the move has been, which is predominantly down to the strong US dollar. While GBPUSD continues to hold below these 3 simple moving averages, it's likely the downward trend will continue. Moving lower from here, we could hit the target at 1.3239, and a break below that could see a target at 1.3172. Now, if you do see any snapbacks in GBPUSD, we could potentially encounter resistance from this area here in at 1.3523, and a break beyond that could see a target this region here at 1.3660. As I mentioned, that the currency pair has been moving lower recently, but at the same time so has the RSI, and it's essentially at or very close to oversold territory. And if it moves into oversold territory, that could be an early signal that the market might look to rebound. Also next week, not only do we have an update interest rate decisions from the Bank of England and the European Central Bank, on Friday we also have the update from the US jobs update. The non-farm payrolls report will be delivered on Friday. So on Thursday we have the European Central Bank and the Bank of England, and on Friday we have the US non-farm payrolls report. Now keep in mind, in the last month's update, the unemployment rate fell to 3.9%, its lowest level since the pandemic began. Even though the headline figure wasn't that impressive, the economists in the market focused on the fact that the unemployment rate fell to 3.9%, the lowest since the pandemic, and which is part of the reason why the Federal Reserve have adopted a more hawkish strategy. Looking here at the US500, we can see the fears about higher interest rates have really put pressure on the US500. Earlier this week, it fell to its lowest level since June last year, which really kind of underlines how bearish the market's been. Although it has rebounded somewhat in the past few days, it's still holding below these three simple moving averages. And while it holds below these moving averages, it's likely that the bearish trend will continue. Moving lower from here, it could look to target 42.71 or perhaps 42.20. If this near-term rebound does continue, we could look to retest this peak here in at 44.53, and moving beyond that, we could look to target this peak here in at 46.01. That's all from me for this video. Thank you very much.
Thank you.